Imagine the possibility of a single investment that not only complements your current income, but also has the potential to outperform it, surpassing what you earn from your full-time job. This isn't a distant dream, but a tangible reality with the introduction of the ULTY ETF, a vehicle designed for those seeking to maximize their passive income streams. In a world where financial independence and security are paramount, such an opportunity offers a gateway to a future where your investments work harder for you than you have to work for them. With the power of compound interest and the right market conditions, this investment could provide a steady stream of passive income that could change your life. But how does it work? Well, that's what we'll be diving into in today's video. But first, overview of ULTY ETF. The YieldMax Ultra Option Income Strategy ETF, or ULTY ETF for short, makes a significant evolution in exchange-traded funds. As its name suggests, ULTY ETF is not just any ETF. It's specifically designed for investors looking to maximize their income through an innovative and strategic approach to investment. At its core, ULTY ETF aims to offer a high-yield return to its investors, making it an attractive choice for those seeking to enhance their income streams without disproportionately increasing their risk exposure. The allure of ULTY ETF lies in its dual promise of income generation and risk management. By focusing on covered call strategies, the ETF taps into a source of income that is both consistent and relatively predictable, a rarity in the often tumultuous world of investing. This strategy is particularly appealing in uncertain market conditions, where traditional sources of income might falter. The additional layer of security provided by the covered call strategy, which helps to cushion the portfolio against market dips, further elevates ULTY ETF's appeal, offering a semblance of stability in an otherwise unpredictable market. Moreover, the ULTY ETF is not just about high yield, but it's also about accessibility and education. For many investors, the world of options trading can seem daunting and inaccessible. However, ULTY ETF demystifies options trading and makes it accessible to a broader audience. This accessibility is a crucial aspect of the ETF's appeal, offering investors a guided entry into more sophisticated investment strategies. Moreover, by providing exposure to this strategy, ULTY ETF serves as an educational tool, helping investors to broaden their understanding and comfort with different investment techniques. The strategic selection of underlying securities is another hallmark of ULTY ETF's approach. The ETF's management team meticulously selects securities based on their implied volatility levels, aiming to optimize the income generated from selling covered calls. This selection process is underpinned by a rigorous analysis of market conditions, company performance, and potential income generation, ensuring that only those securities that meet the stringent criteria are included in the ETF's portfolio. This careful selection process not only enhances the potential for high yield, but also aligns with the ETF's risk management strategy, providing a curated selection of securities that are deemed to have the best balance of risk and reward. Now that we've uncovered the allure of ULTY ETF, let's peel back the layers to understand the sophisticated investment strategies that drive its success. Investment strategy and mechanics. The investment strategy that underpins the YieldMax Ultra Option Income Strategy ETF is both sophisticated and distinct, centered around the utilization of covered calls to generate income. This strategy, while not new to the realms of investing, is applied in ULTY ETF with a nuanced approach that aims to maximize income while managing risk. At its essence, The covered call strategy involves the ETF holding a portfolio of stocks and selling call options on those stocks. The premiums received from selling these options serve as the primary source of income for the ETF, a method that provides an attractive alternative or complement to traditional dividend income. The selection of underlying securities for ULTY ETF is a critical component of the investment strategy, with a particular focus on implied volatility levels. Implied volatility, a measure of a security's expected price range, plays a pivotal role in determining the potential income from selling covered calls. Securities with higher implied volatility typically offer higher option premiums, making them more attractive for the covered call strategy. However, higher volatility also implies higher risk, which necessitates a careful balance. The ULTY ETF management team meticulously analyzes potential securities, selecting those that offer an optimal mix of high implied volatility and sound fundamental characteristics. This selection process is not static. The ETF regularly reviews its portfolio, adjusting holdings as necessary to respond to changes in market conditions and volatility levels. This dynamic approach to portfolio management ensures that ULTY ETF remains agile and responsive to the evolving investment landscape. Regular reviews of the portfolio allows the management team to make informed decisions about increasing, decreasing, or eliminating covered call strategies on existing securities. Such reviews also provide the opportunity to identify and implement strategies on new underlying securities that meet the ETF's criteria. This constant evaluation and adjustment process is key to maintaining an optimal portfolio that strives to maximize income while managing risk. The mechanics of the covered call strategy and the selection of underlying securities based on implied volatility are central to ULTY ETF's aim of providing a high-yield income stream to investors. This strategy, while offering the potential for significant income, also involves a level of risk management through the selection of securities and the cap on upside potential imposed by the obligation to sell at the strike price. However, by carefully curating its portfolio and dynamically managing its investment strategies, ULTY ETF seeks to offer investors an appealing balance of risk and reward. Let's have a look at its performance. Performance analysis. Well, the performance of this ETF can be best understood through a detailed examination of specific holdings within its portfolio and the outcomes of its covered call strategies. This ETF's strategic approach to income generation, primarily through covered calls on curated selection of securities, aims to optimize returns for investors while managing risk. By analyzing case studies of C3AI, Altimmune, ARM Holdings, CleanSpark, and Coinbase, we can gain insights into how ULTY ETF operates and the efficiency of its strategies in generating returns. Starting with C3AI, a leading enterprise AI software provider, ULTY ETF's decision to include this stock and implement a covered call strategy exemplifies the fund's sophisticated approach to income generation. Despite the inherent volatility associated with tech stocks, the ETF successfully navigated this by selling covered calls, which capped the upside potential but provided significant option premiums due to the high implied volatility. This strategic move not only generated immediate income through the premiums, but also offered a buffer against the stock's price volatility, showcasing the fund's ability to leverage market dynamics to benefit investors. Then we have Altimmune, another holding within the ULTY ETF portfolio. This one further illustrates the efficiency of its investment strategy. By selecting this biopharmaceutical company with a promising but volatile stock, the ETF leveraged the high implied volatility to sell covered calls, again securing premium income. Even when the stock experienced downturns, the premiums from the covered calls provided a steady income stream, demonstrating the ETF's ability to mitigate risk while capitalizing on the potential high returns of biotech investments. Next is ARM Holdings. It represents a different aspect of ULTY ETF strategy, focusing on the tech sector's potential for growth. By holding ARM Holdings and selling covered calls, the ETF not only benefited from the stock's appreciation, but also from the additional income generated by the option premium. This dual income approach, balancing capital appreciation with income from premiums, exemplifies ULTY's ETF's multifaceted strategy to maximize returns for its investors. CleanSpark is also there, a company specializing in energy management and microgrid solutions. It further underscores ULTY ETF's ability to identify and capitalize on high-growth potential sectors. The covered call strategy applied to CleanSpark allowed the ETF to benefit from the stock volatility by securing high option premiums while also participating in the stock's growth trajectory. This case highlights the ETF's adeptness at selecting stocks with high return potential and using covered calls to generate consistent income irrespective of market conditions. Lastly, Coinbase, a leading cryptocurrency exchange platform, showcases ULTY ETF's diversification strategy and its foray into emerging markets. By incorporating Coinbase into its portfolio and employing a covered call strategy, the ETF tapped into the burgeoning cryptocurrency sector's growth potential while mitigating risk through option premiums. This move not only diversified the ETF's income source, but also demonstrated its proactive approach to exploring new sectors with significant growth prospects. The performance analysis of ULTY ETF through these case studies reveals a deliberate and calculated approach to income generation and risk management. By carefully selecting stocks on different sectors and applying covered call strategies, ULTY ETF has showcased its capability to navigate market volatilities, optimize income through option premiums, and manage the balance between risk and return. These examples underline the ETF's success in executing the unique investment strategy, making it an attractive option for investors seeking diversified, high-yield income streams. Now, after examining the impressive performance of ULTY ETF, let's explore how Defiance ETFs can further amplify your investment journey, adding another layer of growth to your portfolio. Defiance ETFs and distribution details. Defiance ETFs play a pivotal role in complementing the investment strategy of the YieldMax Ultra Option Income Strategy ETF, ULTY ETF, particularly through their attractive distribution rates. These ETFs, which focus on specific niches or themes within the market, provide a diversified source of income and growth potential. In the context of ULTY ETF, Defiance ETFs offer an opportunity to enhance the overall yield of an investor's portfolio through their distributions, which can be reinvested to purchase additional shares of ULTY ETF, thereby harnessing the power of compounding returns. The strategy, often referred to as the dividend wheel strategy, is a systematic approach to growing one's investment through the reinvestment of dividends and other forms of distribution. In the case of ULTY ETFs and Defiance ETFs, this strategy is particularly effective due to the synergy between the two. ULTY ETFs focus on generating income through covered calls, and its selection of high-yield securities complement the varied themes and niches that Defiance ETFs target. The regular distribution from Defiance ETFs act as a steady stream of capital that can be reinvested into ULTY ETF, further enhancing its ability to generate income and capitalize on the growth opportunities within its portfolio. Moreover, the dividend wheel strategy emphasizes the concept of compound interest, where reinvestments grow not only from the capital gains and income generated by the underlying assets, but also from the cumulative effects of reinvesting distributions over time. For ULTY ETF investors, this means that the distributions received from Defiance ETFs are not merely a passive income stream, but a strategic tool for accelerating portfolio growth. By reinvesting these distributions, investors can increase their holdings in ULTY ETF without additional out-of-pocket investment, leveraging the power of compounding to build wealth more effectively. Moreover, this strategy aligns with the goals of investors seeking not only immediate income, but also long-term growth and financial security. The ability to reinvest distributions seamlessly into ULTY ETF facilitates a disciplined and long-term approach to investing, where the focus shifts from merely accumulating wealth to strategically growing it through prudent reinvestment and compounding. The relationship between Defiance ETF and ULTY ETF underscores a holistic approach to investments that combines immediate income generation with long-term growth potential. The attractive distribution rates of Defiance ETFs, when reinvested into ULTY ETF, enable investors to capitalize on the compounded returns, thus enhancing the overall efficiency and effectiveness of their investment strategy. And there you have it, a comprehensive exploration into the intricacies of the ULTY ETF and the various strategies that underscore its potential as a pivotal element of your investment portfolio. So, are you ready to dive into the world of ETFs? Equipped with the knowledge to harness the potential of ULTY ETFs? Share your thoughts in the comments section below, and let's engage in a productive discussion. Don't forget to hit the like button if you found this deep dive valuable, and subscribe to our channel for more insightful content like this.